Good morning, everyone, and welcome again to another JBDC Virtual Biz Zone. My name is Sansia Campbell. By now, you should know me. I've been with you since April of this year. JBDC has been coming into your homes and offices and places of comfort for the past, what would it be up now, 6 months? And we've been sharing with you on different topics about business development, marketing, pivoting in this very unusual time. And this morning we are here again to share with you about the tax credit and tax compliance this morning. And we're going to be having a presenter who will expound on these topics for us. Our presenter is Mrs. Yanique Jolly-Stone, and I'm going to tell you a little bit about our presenter this morning. She's an attorney at law and tax consultant. She was called to the bar in 2001 and spent over 15 years as an in-house counsel in a Big Four audit firm where she honed her skills in taxation and business law. She established her practice in 2020 where she focuses on taxation, estate planning, and charities. Yanique sits on the advisory committees of certain not-for-profit organizations and provides training on operating registered charities. And she is going to be sharing with us also on the registration of a business versus the registration of a company and looking at the advantages and disadvantages of registering each. As a reminder, of course, we take your questions. We encourage you to write your questions in the chat during the presentation, and then post presentation we will open up the floor for questions. Also, as a reminder, this session is being recorded and it will be available on our YouTube page. So at some point later on this week, you will be able to access the presentation. So if you know someone who would have missed it for whatever reason, you can always encourage them to just visit YouTube, click on JBDC Jamaica, click the notification bell, and they will be notified when the presentation goes up. So at this time, I'm going to turn over to Mrs. Jolly-Stone, and she's going to go ahead with her presentation on tax compliance and the tax credit, as well as the registration of business versus a company. Over to you, Yanique.
Thank you, Sachia. Good morning, everyone. And I'm quite happy to be here with you to spend some moments as we discuss some matters that are relevant to all of us doing business. And so I hope that as we spend a few moments together, you will learn quite a bit and find it to be a useful use of your time today. So as was shared with you, we're looking today at tax compliance issues. Really, it's circled around the new announcement that the Minister of Finance had announced earlier this year about a new MSME tax credit. And so leading up to that, I just want to give a bit of background about the importance of tax compliance, whether it should be a priority, looking at some of the available tax credits for MSMEs. We will look at the advantage or disadvantage of choosing a business over incorporating a company. And finally, if we have a bit of time, just share some tips on some legal tips on how to manage during business downturns and difficult and challenging business times. So we'll start off by looking at tax compliance, whether it is a priority. And in our look today, we're not going to go through tax deadline dates and interest rates. That kind of information is readily available on the TAJ's website. What I really want us to focus on today is whether tax compliance should be a priority in business. Most business people would agree that yes, you should pay your taxes, but whether it is a priority when you're looking at all of the important things, sometimes there's no agreement on whether it really should be a priority or not. Certainly from where I sit and what I've seen, it certainly should be one of the major things that you think of once you're going into business. And so let's look at the reasons why. Non-compliance, funny enough, ironically, it can be very costly. Why do I say that? I've had opportunity to meet a few persons in the small business world. One stands out for me. There was a gentleman who had said that he was about in the 3rd or 4th year of doing business. He had not filed any tax returns up to that point, income tax returns we're speaking about. And for whatever reason, he needed a tax compliance certificate, TCC, urgently. And as those of you would know, you now need to get all of your tax returns filed, etc. So he was going through that process. And I asked him, is there any reason he had not filed before? And he said, well, he knows that he hadn't made any profits in those first 2 or 3 years. Yes, he had cash flow, but he didn't make any profit. And he knows that if you make no profit, then you don't pay income tax, which he's correct about. What he was not aware of was that around 2014 or so, the government made a law that where you're late in filing your tax returns, they impose a penalty of $5,000 per month. So even if you have no tax to pay, if you're late in filing those returns, then you have a penalty of $5,000 per month. So remember now, we are in the 3rd year of his business going into the 4th year. So we're looking at 12 for each year, 12 months by $5,000. That's $60,000 for each of the years that he is outstanding. He's into year 3 now, so we've gone to $180,000 of just penalties. This is not tax. And that's just for year 1 of his business. If we go into year 2 of his business, where he didn't file the 2nd year's tax return, we have another set of $5,000 per month. That's another 2 years. That is $120,000 now on top of the $180,000 that he had before. We are now at $300,000 of penalties alone in situations where he has no profit and therefore no income tax. And so it makes sense to get the information, because you may not be paying taxes, but you end up having to pay the government significant amounts of money just because of lateness in filing. So it's important to pay attention, because you're in a small business, the funds are a bit tight, especially in the early years. You want to use your funds efficiently. Well, the second reason that tax compliance should be a priority is that there are some tax credits that you will be disqualified for if you have not been tax compliant. And later on in our presentation, we will discuss one of those, a particular one, which is the employment tax credit, a lovely benefit that is available to not just small businesses, but all businesses, but it requires being compliant and being on time with your filings. So another story with a person who I encountered, he, unlike my first situation, had good cash flow. He had cash, and month upon month, he was filing the SO1s, which are the returns for your employees to pay over their statutory contributions. And we noticed that every month he would pay them, but he would be 1 or 2 days off of the deadline of the 14th. And so we would ask him, why were you late? You clearly had the money to pay. So why were you late? Oh, he was busy. He had some other things handling. And so, it kind of fell by the wayside. And when we showed him that for the year, had you paid those things in by the 14th, you would have had in excess of $400,000 that would have reduced your tax liability for that year. So that would be a simple thing. He was off by 1 or 2 days every month. And when he realized that, he saw the cost that he had, this wonderful opportunity that he missed just because he did not make it a priority to try to meet those deadlines for his payroll tax filings. So there, you might miss important tax credits possibilities. The third reason is clearly that being non-compliant can cause undue stress, particularly when you need a TCC urgently. Some people need it, more and more institutions are asking for TCCs nowadays for whatever reason. It's common in banks when you want to open a bank account, certainly when you're importing goods. And I remember a situation in my prior career where one of our clients had imported some exotic puppies or something like that. And these animals were at the wharf and they needed to clear them, and they weren't able to get the TCC to present to customs, and the dogs were there and they were saying, boy, the dog have a special diet and they're going to die if we don't get them cleared. And it was one complete stress between all of the accountants to try and get all of the filings that that company had to get up to date to save these dogs, because, you know, they weren't going to be properly cared for if they were not in the right hands. So that causes stress for not only you, but the accountant who helps you and everyone else who is going to help you to get things. Your bearer, lots of bearers have wonderful stories of how they've been rushed to try and get things filed because things are pending at the port, or some transaction is being held up because the TCC is not ready. And also, of course, opportunities, more and more government contracts, you need a TCC to put in your proposal. So you don't want to miss opportunities because you're not ready with your tax compliance certificate. So finally, in this regard, many people back in the day, you know, years ago would say, okay, I'm not gonna file taxes as a priority. You know, over a period of time, I'm going to sit and talk with the taxman and, you know, one away and see if we can work out something. Or I might know someone who knows someone who can help me to get a waiver of some of those tax penalties, particularly the interest or penalties, even some of the taxes, if you can put an argument to it. And that might have been very possible years ago, but since we had entered into the IMF program some years ago, those kind of discretionary waivers are no longer available. The government has a very limited bucket of waivers that they can give in any particular period, and they reserve those waivers for very exceptional circumstances. And it's unlikely that your tardiness, you know, in filing is going to qualify. They also have, you may have heard of a debt write-off facility that is also available at the government. And the debt write-off facility is different from a waiver. A waiver means that the debt is gone and can never be pursued by the government again once they waive it. But a debt write-off is another facility where a taxpayer can say, listen, you know, I am unable to pay. It's impracticable that I'll be able to pay this liability. And the government would look at it, tax administration would look at your situation. And if they agree that collecting these taxes is very unlikely, they will add it to their debt write-off pool, which simply means that they're treating it like it's a bad debt. They're gonna put it aside, but it is not waived. It's just put aside, and they will not pursue you for the while. But at any point, they may review your company situation or your business situation, and they may pursue you again for the same taxes. Now, even that process, although helpful, has some challenges. So let us not try to say, well, maybe we can arrange a debt write-off with the government. That process is very, very, very long. And you may have been aware recently where a newspaper had reported about big companies being provided, their debts were written off. And so the process is also quite public. And the names of your company will be put in the Gazette that documents where a debt write-off has been given. And to the extent that you don't want your company to be identified with that kind of default, you can't avoid it. So debt write-off looks attractive, but it can be a very, very long process. And at the end of the day, your business or your company will be named in the document, which will become a public record, and the public would be able to know about all of these liabilities that you have. All right, so I think I've made the case that being tax compliant should be a part of one of your major things that you have your eye on as you're operating your business. It saves you cost, saves you a lot of hassle, and it saves you embarrassment if it comes to that. Okay, so we're going to get more into the meat of the matter about this special MSME tax credit. Before we get to there, what is a tax credit though? Sounds pretty simple. A tax credit, very simply, is an opportunity or a facility the government gives you to reduce your income tax liability. So it is a deduction that you apply after you calculate the income tax that is due. So dollar for dollar, you're able to reduce whatever amount you calculate you must pay to the government. And it's a very, very valuable gift. Many times there's nothing additional that you need to do to get that credit. Sometimes it's because of your status. Sometimes, as we mentioned before, with the employment tax credit, once you pay on time, you automatically qualify to reduce your what is payable to the government dollar for dollar to a lower figure. So we will be looking at two particular tax credits today, the employment tax credit and the new MSME tax credit, which I must indicate to you has not yet been gazetted or put into the law. So the announcement was made, but up to this point, up to my checks last week, there was no gazette or legislation that was published to specifically outline how it works or bring it into effect. So if we look at an example of a small business company, let's look at the name of it. It's Kim's Catering Limited. And I have here just a very simple tax computation. Very, very simple, just for discussion purposes. Let us say that they have revenues for a particular year of $7,000 and they have deductible expenses of $4,200. Then the profit that would be taxed would be $2.8 million. When you apply the tax rate for companies, which is 25% for regular companies, 25%, the income tax that Kim Catering is to pay at the outset is $700,000. That's 25% of the 2.8 million. But happily, Kim's Catering qualifies for certain tax credits, which we will look at some of them. And let us say the tax credit totals $450,000. That tax credit, dollar for dollar, will reduce what has been calculated as the tax that is due to the government. And so it reduces it further to only $250,000, and that becomes the tax that is payable to Tax Administration Jamaica. So the tax credit clearly is a very, very valuable tool. In this situation, it reduces a company's liability from $700,000 down to $250,000. In some cases, your credits, depending, of course, on how much you owe, it can reduce your liability completely to zero. So the first tax credit we will look at today is the employment tax credit, ETC. Many of you may be familiar with it, so I'm just going to go over it high level because it's one of the tax credits that are very, very useful in today's economy, particularly for the businesses that actually have employees. The government put it in place to encourage people to employ persons and to keep them employed. So this tax credit allows for you to get a credit of the total NIS, NHT, ed tax, and hard contributions that the business had made for its staff. And here we're looking at both the employer portion and the employee portion. There's a limit, however, on the total dollar amount that can be credited. And the limit on that total amount is that it cannot exceed 30% of the income tax liability that you have already calculated. So in our example before, we had initially calculated a liability of $700,000. $700,000 is our liability. And the ETC rules would say you total all of the employee and employer contributions made for your staff, and you will be able to deduct an amount not exceeding 30% of the 700,000. That's about 200 and something dollars. So if you are able to use the entire amount up to the 30% of your liability, your effective tax rate for a company can reduce from 25% to 17.5%. That's the effective tax rate. So you can understand why this employment tax credit is very, very valuable for most businesses, both MSMEs and regular businesses. It's not only available to companies, self-employed persons also qualify as long as you have staff members. So the principle will still apply, but for a self-employed person, you must pay your own statutories upfront. You must be compliant with paying over your own NIS, NHT, ed tax, and so on for yourself as a self-employed person before you are able to benefit by any ETC for the statutory paid for your staff. So of course, the government is saying you need to be compliant, and we won't give you the carrot unless you do your part, which is to be compliant with your own tax filings as a self-employed person. No, it's a lovely gift, the employment tax credit, but there are limitations to it. You can only use it in the same year, the same financial year that you're reporting for tax purposes. So if you have any excess employment tax credit that exceeds your income tax liability, you are unable to carry that excess forward to the next year. So you can only use up as much as you can use up in the current year. And in the cases where the credit is more than your income tax liability, it still will not qualify you for a refund. So long and short, you can only use up your ETC to the maximum to reduce your tax liability totally to nil. It can't get you into getting the government to say, well, you owe me a refund because the ETC is more than what my income tax liability is. That is not the rules, that's not the policy. You can only reduce it to nil. So of course, as we said, if you don't use it, you will lose it. You cannot roll forward any unused ETC to the future years. What is used for that year is done, and that's it. If you don't use it, you're going to lose it. And finally, just to reiterate, the ETC is only available if you have staff in your business. If you're a sole trader and you're the only person in the business, this is not a tax credit that you can utilize. So here we're going to the new MSME tax credit. As again, it's not yet in law, but it was announced by the minister in March of 2020 as a part of the plans for the financial year 2020 into 2021. He did say that for the 2020 tax return, the credit would be available to be applied on that return. And that tax return is due in March of 2021. So the government does have some time to generate that law, or gazette as we call it, in time for March 2021 of next year, so that what he has announced would be fulfilled and the taxpayers would be able to utilize it. So as I said, there's no legislation on it. So the information I'm sharing with you today comes from the ministry paper that was tabled in Parliament when Dr. Clark had shared and announced the tax credit. That ministry paper indicates that the tax credit would be $375,000 per annum for each taxpayer that qualifies. But interestingly enough, the tax credit is only available to companies. So if you operate a business, a trading as enterprise, you will not qualify for this tax credit. The revenue, of course, for companies that qualify, they must be small, and so they can't exceed the $500 million threshold that TAJ tends to use to separate categories of businesses between large and small. Just like the ETC, any excess tax credit, MSME tax credit, meaning what exceeds whatever your income tax liability is for that year, it cannot be carried forward to be used in future years. You must use it in the particular year to the extent that it can be used. And any excess MSME tax credit also cannot result in a refund. As we explained before, you can only apply it to reduce your tax liability to zero. You cannot reduce it to a situation where the government now owes you money in the form of a refund. And finally, this tax credit, while announced, the Gazette is not in effect, and in the tax world, theoretically, yes, no tax is really in effect unless the law has been passed, and the process for that is publication in a document called a Gazette or a regular legislation. It has to be written and it has to be published, and up to last week's check, there was no publication of this law. As mentioned before, provided it is issued before March of next year, when the 2020 tax return is due, then the taxpayers should be able to take advantage of that credit to reduce their income tax liability for 2020. And so let us look at an example of how these two tax credits can help Kim Catering Limited to reduce her income tax. As you mentioned before, we're assuming, of course, that she has employees and she has enough statutory contributions, both employer and employee, that she made to allow her to utilize fully the 30% cap. So she is able to use 30% of what her income tax liability is at the beginning. And that 30% of the $700,000 gives her $210,000 worth of employment tax credit that she can use. And she also has the benefit of the MSME tax credit, assuming it comes into law, and that amount is $375,000. So when we look at the tax computation again, we had started by saying she had, after her calculations arriving at her profit, she had $700,000 payable to the government, and then she used her credits, reduced it by the employment tax credit of $210,000, and she's able to reduce it again by the MSE tax credit of $375,000. Her tax payable to the government is now only $115,000, a significant reduction, and you can see the clear value to businesses. All right, so we had just completed our first segment, looking at the importance or the priority of tax compliance and how that links in with the tax credits that are available to businesses right now, as well as the new MSME tax credit that was announced in March. We're gonna go now, just pausing a little, just to give you a chance to refresh your mind to look at another topic. This is our second topic we're looking at of three. Registering a company, meaning a business, what I'm going to call a trading as business, versus incorporating a company. And while I understand recently you had the benefit of a company's officer sharing with you the process of doing both, today I'm sharing with you some considerations before you get there, when in making a decision as to whether you should register a trading as business in your name, or whether you should now incorporate a company, because they are two different animals, two different business structures, right? So for our purposes, we can think of a catering business. I had referred to her business before. This is Kim. She has a catering business. She's in business for 3 years. She provides daily catered lunches to 2 large businesses, as well as for special functions. She provides pastries to Z Hotel weekly, and she employs 12 workers. She operates from rented commercial space, and she leases 4 parking spaces for senior staff. That's the outline of her business. So she would have considered the advantages and disadvantages of operating as a trading as business or incorporating a company. So generally speaking, the trading as business is me, like Yanique Jolly-Stone, and I might want to sell drinks, natural juices, and I go and I say, I would like to register natural juices, Jolly Natural Juices, and that's my business name. So it would be Yanique Jolly-Stone trading as Jolly Natural Juices, right? That business is all operated by me. Everything that the business done is what I am doing, because I am the person doing the business. I've just given myself a name. However, I could now set up and incorporate a company, same name, Jolly Natural Juices, but the company would now have to have the word limited attached to it. And that indicates that there's a company set up which is separate from me. And all of the business is done by the company. I am merely an officer in the company, or I may be employed in my own company. But the company has a separate personality from me. And if there are any transactions done, any liabilities, any risks, it is a company that is directed to, and not Yanique Jolly-Stone personally, as would be the case if I'm operating a trading as business. So those are the general differences between a business and a company. So let's look at the advantages and disadvantages of either of them and to see what Kim decided in the end based on her assessment of her own business. So some of the advantages of using a business registration, that is a trading as structure, is the setup is simple. Okay, it's very simple to establish. It's mostly a form filling exercise where you indicate who the owners are behind it and the nature of the business, etc. Compliance obligations are simpler with the regulator, and the regulator is the Companies Office of Jamaica. It needs to be renewed, your certificate, every, I think, 3 years or so. And if the owners change, you may need to give them notice of a changing ownership, but the compliance obligations are quite minimal. You also, as a business, trading as, enjoy the benefits of the 1.5 million tax break, which is available to individuals only. As I said, when you're trading as, it's really you as an individual doing your business, but it is not available to companies because, of course, a company is not an individual. So companies don't get the 1.5 tax break on their income tax, but your business trading as will enjoy the 1.5 tax break when calculating income tax. And finally, a trading as business is easier to close than a company. As indicated before, it is mostly a form filling exercise. Certainly any accountant that you have, he may or she may give you instructions as to how to close the accounts. You would still need to do some interaction with the tax department to close your ledger accounts there also. But as far as the company's office goes, it's not difficult to close a business. But there are disadvantages to this simple structure. One of the first ones is obvious, and I alluded to it when I spoke about if there are any liabilities, that the company is the one that would have the liability and not you personally. So for a trading as arrangement, there's no personal protection from liability for the owner. And so I've spoken to some small business persons and they almost all the time figure, nobody not going to sue me. My customers, we have good relationship. They're not people who are contentious. If there's a problem, they can talk it out and work it out. That might be true. That might not be true depending on who your customers are. If I think back to the scenario with Kim and Kim's trading, one of her customers is Z Hotels Limited. And if she provides these wonderful pastries to them and they sicken their guests there significantly, a customer like Z Hotel may sue her for whatever damage they suffer by providing food to their guests and it sickens them. So you don't know in all cases what type of customer you have and how aggressive they may be in suing. And another stakeholder you have to think about, which most small business persons don't, is Tax Administration Jamaica, because they also do sue people. And when they have those assessments after the penalties and interest come, and you have no company separate from your own business and operations, that can see a lot of your assets being seized, your personal assets, your vehicle, maybe even your house, in order to settle significant liabilities. So the trading as structure exposes you in the situation of liabilities. And another disadvantage with the business structure is whenever there's an ownership change, for example, death or retirement, then the assets in the business, certain assets will have to be transferred to the new owner. And here I'm thinking about things like property. If you own the business operates from some property that is owned by you as the operator, or motor vehicles, which would be in the owner's names. On death or retirement, those assets would need to be transferred to the new owners. In the company, you don't have that need because the company continues, even if the owner of the company passes away or retires. There's no need for changing and transferring assets. A business also lacks continuity, which is similar to what I mentioned before. If the owner passes away, the business can end, or it goes into the estate of the person, and it's now for the executor and others to decide who is going to own the business, how are the assets going to be handled, etc. And again, another disadvantage is that for businesses, you need to renew your registration every few years. Companies don't need, once you're incorporated and you have that certificate, it lasts just like a birth certificate for an individual. That is sufficient to establish you, and there's no need to renew. So let's look at an incorporation if you choose to incorporate a company instead of operate a trading as business. So here, of course, we know it's more structured and it will have certain protections. The advantages, as we mentioned, it provides personal protection from liabilities, lawsuits, and from tax assessments. You can contain the risk and leave it at the company's standpoint substantially, instead of it looking through the company and coming back to you and your own personal assets. We just mentioned before, up to this point, based on the information provided to us, only companies can qualify for the MSME tax credit of $375,000. So if you're trading as, you do not qualify, only companies will. A company can own land and property, so there's no need to transfer assets when the owner of the company passes away or retires. Those assets will remain in the company's name. Stakeholders may also perceive the entity as a better organized entity compared to a business. And the stakeholders here are typically banks, even tax administration in Jamaica would tend to see a company structure as more organized. Certain vendors and certain customers also have a more favorable view of companies over businesses. Again, for some of the reasons we mentioned before, a business can be wound up very quickly and they disappear. So people like to feel like they're doing business with people who they will see next year, and they may not run off with their goods or run off with their money, and they are unable to find them. So the company structure gives some people more comfort in doing business with you. And again, the company gives continuity, as we mentioned before. What are some of the disadvantages? Well, as mentioned, having a company really involves more formality. For you to make certain decisions, if you want to change a director, if you're changing a company secretary, you need to pass a resolution, and you need to give a notice of some of those changes to the company's office within about 14 days of doing so. So you have some of these peculiar things that need to be done. They're not technical things, they're just administrative to notify the company's office of some changes. There's more reporting, as I mentioned before, change of your business address, change of a company secretary, director, etc. If you need to transfer shares when ownership changes, you might have some taxes when those shares are transferred, which is not the case generally for a business, trading as business if they're changing ownership. And of course, with more filings under the company situation, you are at risk for having more penalties for non-compliance. So more administration and more filings can mean more penalties if you are not compliant, if you don't stay on top of those deadlines. And a company is more difficult to close. So the company's office particularly requires every company to present an auditor certificate that verifies that there are no assets or no liabilities in the company before they will remove that company from the record. And so that implicitly means that your company needs to engage an auditor to be able to provide that certificate. That's an additional expense. So the process itself takes a little more than a regular business to close. Although there are advantages and disadvantages to the different structures, they, however, share certain things, okay? Both business forms, in both business forms, you are still required to maintain accounts. So our tax rules indicate anybody doing business, you have to maintain accounts and maintain them in English and have records to present if the tax authorities ask for them. So whether you have a trading as business or if you have a established company, both must have accounts maintained. Both types of businesses also have to file tax returns in the same way. And of course, both types of entities will need to provide a tax compliance certificate for whatever it is doing. If you're importing goods, if the bank requires it, it will be required of both types of businesses. So there's no clear advantage that one provides less compliance in terms of these significant administrative activities than the other. They both share similar amount of compliance requirements. And so when it came to making a decision, Kim thought about her business. And Kim thought to say, let me look at the risk of my business. And she felt that her catering business has risks. Because of course she's preparing food, and food can sicken people, and she may be exposed to some sort of liability, depending of course who her customer is. So for that purpose, she thought that the personal protection that comes from a company was attractive to her, and that was significant for her. I would say generally on this point, if you are deciding on whether to remain as a business or a company, assess the risk of your particular business. And I would say generally, if you have customers coming onto premises to do business with you, if you have heavy equipment or heavy vehicles around the place where there are obvious indications that there's a possibility of personal injury or injury to property, then you really may want to be more inclined to using a company to protect you from some of those risks. The other thing that Kim thought about is the perception of her business that her stakeholders may have. And here she's thinking about her bank, she's thinking about TAJ, and other persons who may wish to do business with her. Now, she intends to pursue more established customers in the future. You know, she wants to grow her business and she wants to go for a certain category of customers. And she also wants to obtain a loan. And therefore, she wants these stakeholders to perceive the entity as a well-organized and robust one. So that is one of her leanings also that is leading her to say, I'm now ready to incorporate a company. Of course, if your business is one that you may not have the need to seek external financial support or from the established financial industries. Some businesses operate well for a few years based on they have a rich uncle somewhere and he's willing to invest in it, or they have sufficient funds internally that they may not need to approach a bank or other financial institution at the moment. And so this kind of consideration of perception and so on may not be as critical for that business now, but certainly if you seek external financial support, banks will always tell you that they're more inclined to accompany. Again, as you mentioned, we want to know that next year the company will still be there and not have vanished into thin air, which is possible with a trading and as business. And finally, Kim thought about the fact that she has, among her 12 staff, she has a certain amount of staff that can help her administratively to keep up with the filing requirements that attach to operating a company. So she's in business for 3 years. She has the support that she thinks she's able to manage it well without attracting penalties for late filing, etc. And so looking at all of those considerations, she decided that she was now ready to incorporate a company. Even if some people don't have the staff internally, you might be at a point where you feel that you can outsource that kind of support. There are accountants that help, there are attorneys that can help with your corporate secretarial filings, like myself. And so the resources that we speak about may not only be internal resources with your admin staff, but you have the funds that you're able to spend on third-party support to help you with some of these things. And those costs are not usually exorbitant because that support is not highly technical, but it is very important because, of course, of the penalties that will apply if you fail to do it. Okay, so we have completed our second topic in this area, and we're going to enter into our final segment, after which I'd be happy to take any questions that you might have as we go through. As we spoke, we're covering a hodgepodge of different topics. We think that they're useful for small businesses, and they are separate, but they have a connection between it as we go along. All right, and so we're going to enter in our last segment here. We're speaking about managing through business downturn. And this section really is just to share some legal tips on how to navigate, keep your business afloat, what lessons can you learn from this difficult time, which in the future, some of the things that you can tweak to help you to survive through difficulties difficult business periods better. So again, we're going to use Kim's catering business as our example. We said she's doing catering. She provides pastries to a hotel and lunches to 2 businesses. She has 2 workers. She operates from rented commercial space, which is very common. And she leases 4 parking spaces for her senior staff. So tip number 1 is to seek flexibility in your contract terms. Now, most people don't like contracts. Most of the times you can't avoid it, but contracts can be very, very useful. Without a contract, a lot of things are up in the air. But when you have a contract and you're able to use it to your advantage also, to give yourself some flexibility, you will come out the better off. So one of the useful terms, if you're ever presented with a contract, or you who have your own contract, is to include an early termination clause. Okay, and an early termination clause is often used when you have long-term contracts, and the more common ones are things like commercial leases, which are often 2 or 3 years term. And let us say you have a early term, you have a commercial lease. Kim was aware of the benefit of an early termination clause, and so when she entered into her commercial lease with her landlord, she included the early termination clause, which essentially says that she would be released from any obligations, released from the rental obligation in the event of, in certain situations. And many times the early termination clause would indicate what those situations would be. But you can have a kind of catch-all clause that says, or otherwise, if both parties agree, giving 3 months notice or giving 6 months notice, or sometimes even giving 12 months notice, depending on what it is. Because most of these fixed term leases, they only end when they run out, they expire themselves. It has to run its course, unless you have a term, you both have agreed in the contract that we will terminate early in the event of certain things happening. And so Kim was wise in including that in her commercial lease when a business downturn reached, and she realized that she may have to leave the rented premises and perhaps operate from her home now because business had gone down. She relied on that early termination clause, and that clause allowed her to only have to pay, based on her contract, 3 more months of rent to her landlord. Whereas if she did not have an early termination clause, that landlord may have held her to the remainder of the term of the 2 or 3 year lease. And while she could surrender the lease, she's really at the mercy of the landlord, who might insist that she pay him out, and therefore she wouldn't, she's back in the same financial crunch. So early termination clauses give you an out, give you an opportunity to shorten a long-term obligation, particularly when it comes to things like commercial leases. Another useful clause is a force majeure clause. What is force majeure? That sounds very high level. It's a French word, and force majeure really means superior force. So that something happens, you have no control over it, and it really refers to where situations happen where both parties or one of the parties have no control over that thing, and it causes them to be unable to carry out their part of the contract. And so when you include a force majeure clause, it will release you from an obligation or a liability where you're unable to perform due to uncontrollable situation, act of God, etc. And so at the outset, each party knows that I'm not going to sue you because you weren't able to deliver my pastries to my hotel, because I understand that you are flooded out and your staff is unable to come to work and you are not able to give effect to the contract. And so that will help to manage the risk that you have, because if people suffer damage because you are unable to carry out your part of a contract, you really have an exposure to liability. These will help. Yes.
Yes, just wanted to interrupt you 1 second. Force majeure, would that be applicable in our current situation, which is the corona situation, where basically a lot of the world ended up in lockdown and that kind of thing? And so if contracts, for example, were signed at the end of February, but lockdown started mid-March, so the one party was not able to carry out the contract? Is it a case where companies could be released from obligations or liability for that, or individuals, or is it just for companies?
Companies or individuals. So the critical thing, which is what I am alluding to, is that it's important that your contract terms have this clause in it before
Ah, okay.
signing.
So it would have had to be in the contract
Correct.
before. Okay,
Correct.
gotcha,
I mean,
gotcha.
there are, I guess, on reasonableness principles, you can say, well, we all are affected, but your strongest position is to have that kind of clause in any contract that you are entering into, so that you
Okay.
are more firmly protected than, hoping that a court, if you go to court, that, they will understand and be reasonable. So we're talking about the strongest position that you have, and it will be to include it in your contract before signing.
Okay, great. Thank you. All right,
Yes,
continue.
available to companies and individuals, all persons.
All right,
Okay,
I'll hold all other questions until you're through.
sure. All right. So thank you for that question, though. So the force majeure clause will, like in the situation, and situations, I would think like what I had mentioned, that an area has been flooded out, or even as we saw with quarantine, suppose Kim's staff is in an area and the government announces that that area is on a lockdown for the next 14 days. There's nothing that Kim would have known about it. Her entire staff somehow live in that area, and therefore they can't come to work, and therefore they can't produce. So things like that, not only natural causes, but significant things that happen that no one has control over, like that kind of thing, you have a bit of protection from liability in those situations. Okay, and thirdly, clauses that secure your payment are also very useful. A lot of us as small business owners, we don't like contracts because we like the bit of flexibility, but sometimes you want some firmness in your contracts. You want to say to a customer that, look, you have paid a deposit for me to make a wedding cake for you, and if you don't, if you're free to change your order, but you have to change at least 1 week before, because I would have bought eggs and perishable things, and if you don't change your mind or cancel the order within that period, that deposit is final and not refundable. If you don't have those kind of terms in your contract, you are up the creek. You're going to be in a difficult situation. So it is better for you to document and specify in your contract different terms to ensure that you are paid for work done up to a point before cancellation, or to indicate that people need to pay you. I remember getting someone asking me to do some legal work, and we went back and forward. I drafted the documents, gave it to him. He brought it back and said he wanted some things changed. And then after a few weeks, he says, he's not going to do that transaction and again. Thank you for your help. Yeah, but I did work. So you need to, in your arrangements, understand that you should be paid for work done. If it is that kind of thing, you're catering and so on, you need to indicate and communicate to your customers that payment is due in these circumstances, and deposits will not be refunded in these circumstances, so that you can preserve your revenues. And so it is very useful. Kim uses that for her orders. It helps her to manage canceled orders by customers, and of course, helps her with her cash flow. So contracts essentially gives you options. Do not shy away from them. Contracts can help you during the busy downturns in the different ways that I have shared. Okay, the other thing in business downturns is for you to open your eyes, get some advice, and look at the advantages and opportunities that exist. Yes, there are opportunities. And I just want to share with you 3 of them that I see right now as we go through this challenging time. So many of us are working from home. In Kim's catering situation, she had decided, because the major business that she supplies lunches to, they closed, or most of their staff don't work at the office anymore. So she doesn't have her lunch orders significantly. Her business is down. She has decided she's going to come out of her rented facility and work from her kitchen doing her catering. So she's at home. Now, the wonderful thing about that situation, for those of you who have started filing income tax returns, you know that business expenses are they're like a gold mine. The more expenses that you can find, the more you can reduce your tax liability. And most of us have a problem finding and proving all of the expenses that we incur. But here we're presented with an opportunity, especially for self-employed persons, that when you begin working from home, like Kim, the home expenses now become part of our home expenses rather are now business expenses. And so whereas before she wasn't able to claim certain expenses in our domestic area as a business expense, she now can claim some of these. And here we're looking at things like her interest on her mortgage, we're looking at utility bills, and so on. And so you would need to apportion it, of course. You have to find a reasonable way to apportion some of those expenses and document them as now a part of your business expense. It's even better if she is in between her commercial rental space and her home, because she can continue to claim the rental expense, plus she now has some of her domestic expenses that she can claim as business expenses to reduce her income tax liability. That's an opportunity. It may not happen again for a few years, so we need to take full advantage of it and what it means. So another opportunity to look at is, for example, for Kim, she had excess food stuff left back because she ordered things and now her business is down. What is she going to do with these things? They're perishable. She needs to do them. It's either she's going to dump them or what? Well, she thought and realized that she could donate some of these food stuff to registered charities. And when she donates to registered charities, she again gets a business tax deduction. That's again another gold mine. And so she identified that there was a golden age home nearby. She was able to share her excess food stuff that were still good, of course, and able to get her little receipt from the golden age home that proves that she made a charitable donation to a registered entity, and that is she's now allows her to get an additional business expense when she's calculating her tax returns. And finally, vendors at this time are open to renegotiating terms because everyone wants to survive the difficulties. So this might be a good time to approach one of your suppliers to say, hey, let's look at the terms. Let's see if we can work out something that works for both of us so we both survive this situation. My third tip is to manage your risk. And I'm not an insurance person, but just for business knowledge, these things have proven to be useful for many businesses, including small businesses. So we had spoken before about using written contracts, and the benefits of those helps you to manage your revenue collection, and it limits your exposure to liability with a force majeure clause, etc. Now we're looking at some insurance that can be useful. There's a business interruption insurance, and that, of course, provides funds to Kim in the event of business interruption, like what she may be experiencing right now. Those funds, of course, can be used to help her to pay her staff, keep things going, buy stock, while to tide her over during a slow period. It's a useful investment because, of course, it keeps the business going. And if that is your only source of income, it's worth the investment. Another type of insurance is key man insurance. And of course, that applies to the key man in your business. And the key man here, of course, is a person who, without that person, the business cannot operate well at all. So in Kim's situation, her specialty product is oxtail patties. She is known for her oxtail patties, and just about every order, all of our customers want them. She makes the most of her margins on them. But her oxtail patties, she can't make them well. She has a chief chef who has the recipe, and he has the process, and he alone can do it. If she can't do her oxtail patties, which is her specialty, her business is better she close and go back home, right? So for her business, her key man is that executive chef. And so she may want to have insurance to cover him in the event he passes away or he is incapacitated due to some illness or something like that. The proceeds of that insurance will help her, again, in a similar way, to tide the business over while they have no oxtail patties to sell, or help her in the recruitment process to find someone who is able to do comparable amount quality oxtail patties. two very useful things. The key man insurance is often to cover for the owner of a business, but not in all cases the owner is the central person. Sometimes the owner really manages, but there's a particular staff or two who really makes the business what it is. And so you may want to cover for that to help. When you have difficult times, you have some insurance coverage to tide you over. And finally, our last slide is another continuation about managing your risk. And here we're looking at taking care when you're contracting with foreign persons, and also alternative dispute resolution. So the issue of doing business with foreign persons has often come up in my experience. And one of the things that is important to be aware of, many foreign suppliers, they will often have a clause in their contract that says what the governing law is. And the governing law simply means, okay, if we have a dispute in this situation, the law that will determine who is right and who is wrong is going to be the law of this country. Almost without a doubt, it's almost always their law, the foreign customers law. So if we look at a scenario that Kim would have encountered, she received an order from a Jamaican association in New Jersey. They're having a Jamaican night and they heard about her oxtail patties and they said, okay, we want to order 500. And she prepared them, had them frozen, and had them delivered to New Jersey. Now, her delivery company went to the venue where the function was to be held and got lost, but he delivered it on the premises to where he thought the place was, in a box, and left it at the front. It so happened that someone came by and saw oxtail patties and stole them. The likelihood of these things happening, but let's say those are the fact patterns. And of course, now Kim's record is that the patties were delivered. The Jamaica Association would be saying they're not paying for anything because they didn't receive any oxtail patties. And so the issue there would be, should Kim be paid because did she deliver on her order or not? Now that contract, that arrangement may very well have said the governing law of this order or this contract would be the law of New Jersey. And if in New Jersey, goods are not delivered unless they are delivered to a person who signs for it, then Kim would have a problem. Whereas if the law says a delivery happens once the goods are on the premises, then Kim would have an argument. But the long and the short is that it's important to know which country's law is going to govern that contract so you know what you're getting into. So Kim will know that, listen, Mr. Delivery Man, the law of that thing says delivery doesn't take place unless you deliver it to a person and they sign for it. So ensure that when you're delivering it, someone receives it and signs for it so that you have enough information. If you leave it up, you're exposing yourself and you may not know what you're getting yourself into. So get a bit of legal advice if you're presented with a contract that speaks about what the governing law is. Another implication with doing business with foreign persons is withholding tax. And this is very typical when it comes to fees that, service fees. If you're a Jamaican and you're providing a service to a foreigner, when they pay you, their country may say that they have to withhold a percentage of funds from the fees. And so you're getting a net amount. Now, some countries withholding taxes can be very, very high. Some are small and not to be a worry. But I remember Usain Bolt back in around 2020 when he realized that whenever he ran in the UK was deducting up to 50% of his appearance fees and so on. And he decided that, listen, I'm not going to come back to run in the UK because if that is the net that I'm going to get, by the time I take out my travel expenses, etc., it makes no commercial sense for me to go there and run. And of course, at that time, Usain Bolt was the Olympics. No one was coming to track and field unless Usain Bolt was there. And in that year, the UK government decided that they would waive all of the withholding taxes on their appearance fees for all of the athletes who were coming to the Olympics. So of course, we're not Usain Bolt, we won't have that kind of clout. But the point is, just like Usain, we have to get information, particularly when we're providing services, to find out, will you be withholding any taxes, or is there any withholding taxes on the fees that you will be paying me? I think sometimes in the US, depending on circumstances, it could be as much as 30% that is withheld. So you need information, and you need to know whether there are any facilities that can reduce the tax rate so the arrangement makes commercial sense. Finally, some of my small business owner friends have expressed concern about remedies when they have suffered some kind of breach or damage, particularly from professional service providers. They have said the court system is too long and it's too expensive, and you feel like you have no remedy. So I just want to share with you that there are remedies outside of the court system in business. We have a fairly well-developed alternative dispute resolution framework in Jamaica, and there are different ways in which you can pursue it. The alternative dispute resolution is relatively less costly than court proceedings. You can go by way of negotiations with the other party. You can appear before an independent mediator, and the mediator would listen to both parties and try to come to an agreement that both parties can sync with. So mediation allows, it's not one party wins over the other. Mediation is that let's both of us come together and come to a solution. And in that process, you will sign an agreement to what you have both agreed. And that agreement, of course, is binding. If someone defaults on that agreement after mediation, then you can go back to court to get some remedy for that. Then you have arbitration, which is more structured and more binding. Arbitration is very much like court in the sense that you present your cases before a bench of arbiters who act almost like judges. And after they hear all of the arguments, they will give an award or a judgment, like a judgment. And that judgment is binding. So, and I'm aware that in Jamaica, we have a body called the Jamaica International Arbitration Center Limited. And there, if you bring matters for arbitration, they have a precedent of receiving a decision, an award, in around 3 months of making the full submissions. So it can be done in a timely way. You can get an award or a judgment if you have been wronged, and it is less costly than going by way of a court matter. And so certainly for Kim's business, she was happy to know about those options, that she can go to court depending on what the situation is, but she knows that she has non-court options for getting remedies if she feels that she has gotten poor service by one of her professional service providers, or some other wrong has been done to her. And so I hope that my little presentation here has been useful. I hope you have learned something or refreshed your memory on some things that you may have known already. We covered 3 major topics: the compliance matter, tax credits matters, and here legal tips on managing through difficult situations. And at this time, I will hand over to Sancho, and we can take some questions that hopefully I will be able to answer. Thank you.
Thank you so much, Yanique. That was such a comprehensive presentation. I could never have thought that this is what we were in store for this morning. I might have to call you again to come back and give us some more, explain some more of the legal tips, because, some of us, well, let me speak for myself. My brain is not legally wired, and as such, it takes me a little bit longer to understand the legal ramifications and stuff of business. But it was really, really a great presentation, and I want to thank you for taking the time to share with us this morning. Um, you spoke about compliance and being on time with your tax returns and stuff. And I just want to reiterate that for a lot of our entrepreneurs, because this is how you will be able to benefit from the tax credits that are available. Yannick spoke to the employment tax credit, and the other tax credit was it just a government tax credit where if they pay the taxes on the $375,000, which what's the name of that one?
That is the new one that was announced. So it's the
Okay, but it's
MSME tax credit.
okay, MSME tax credit, but it's not yet in law. That's what
Correct.
you're right. So in order for businesses to benefit from these, um, these credits that are available, you have to be compliant and you have to pay on time. Now, while you were presenting, Yannick, the chat room was blowing up. So I'm going to see if I can go back to the top and find the first question from Shanika Wallace Graham. Does a sole trader qualify for a debt write-off? That's the first question.
Okay. All taxpayers can qualify for a debt write-off. Just so you understand, the debt write-off process is very invasive. They will ask you to present bank accounts of like all the owners. The tax department needs to feel satisfied that you will be
Right.
unable to settle the liability. So yes, all taxpayers will qualify to apply, but not, it's up to the TAJ to decide if they will grant you the debt write-off.
Okay. All right. If you have a registered business but have not stated, or I guess this is started, any operations, should tax returns be filed for the company? This
So
is
you
if
are,
the business is registered but no operations are going on.
okay, so I'm assuming, okay, if it is a company, um, the law says that once you are incorporated, you must file tax returns. So if it is a company, the answer is clearly yes. If it is a trading as business, I believe that you are required to be generating some revenue first before you are to report any income. I
Oh,
can I can do a double check on that, but for sure, once it is a company that is incorporated, from the first year, you must file your tax returns.
okay.
Even if you're doing nothing. So just for information, even companies like a charity, there are lots of charities that are tax exempt. They don't pay taxes, but they have to file tax returns. So the government's position is anybody who is a company, you need to file a tax return.
Okay. All right. Next question. Can force majeure be applied to for sole traders as well?
Yes, I think we had answered that. So anybody, any contracting party,
Right.
once you can sign a contract, which you do, you sign it in your name, you're trading as, then it's a part of the clause of the contract. Both parties are able to rely on the clause.
Wonderful. Another question. When contracting with foreign parties, if the goods from Kim's catering are confiscated, example, the patties by foreign ports, who will be at a loss, Kim or her foreign client?
Well, those are very interesting questions. And I think it only confirms my point that, especially if the goods have left Jamaica are now in the US, it's very possible under the contract, if the contract has the governing law clause that says the governing law is New Jersey, then we'd need to look at what New Jersey law says in that situation. So if my things are confiscated and it's not my fault that they're confiscated, do I have a right to be paid? What does the New Jersey law say about that?
Wow, that question is really a
Yes,
good question,
that is a good
because you
question.
have to think about it. Think about, like, if you're trading in the United States, you have to think about 50 different laws,
Yeah,
basically.
maybe,
And then,
yes,
yes, because each state is governed by a different set of laws.
correct.
Wow, that's a
And
fantastic question,
And
Judith.
depending on some things you really need to get some guidance on, to understand the exposure that you have. And some contracts may not be worth it,
Right.
when you get the information. So information is important.
I think one of the things, though, Yannick, with our MSMEs in particular, and I'm talking about the smaller persons, more the M's and some of the S's, is that they don't have access to these kind of resources. So, for example, legal information as to how to generate contracts or negotiate, or how do we enter into contracts when we're doing overseas transactions, how can they access with the exception of going to a lawyer and say, look here, I'm in business, because you know how expensive it is
Yeah,
to have a lawyer, a personal lawyer.
yeah.
What are there any resources provided by the legal system in Jamaica that the MSMEs can tap into and grab this information?
I am not readily aware of that, but I know that there's so many MSME bodies
Right.
within the government and, committees. I'd like to think that there is some guidance out there. I mean, the work that you're doing right here is exceptional. But some things, it's almost like you're saying, well, I need a surgery on my heart. Can I go to somebody
Mm.
who is not a doctor?
Right,
Only
right,
a doctor can really help you with a heart problem. And there's some things that really only an attorney can give you properly advice on. You can get
right,
lots of things out there, but that might just be guidance and not advice, if you
right.
understand the difference.
Yeah, man, I understand.
Yes.
All right, I'm seeing a hand up here from Roxanne Lewis. Roxanne, I'm trying to unmute you. All right, go ahead with your question, Roxanne.
Hi, good morning. So
Morning.
I'm a small business owner and I haven't been working because the business is not doing anything from March 13th. So it had come into the time when it was time for tax again and I had to pay tax. So I have paid tax like twice for the business since it's not I'm not doing any business since March. Now the third tax I have to pay, which is due from which was supposed to pay September, which I haven't paid yet because of lack of funds. Is there anything for persons like us who the business not doing well? We still have to come up with this money even though the business not doing well or not we're not doing anything because of COVID.
What kind of business are you in,
In
Roxanne? Say that again.
in the spa business.
I'm sorry, spa?
Yes, ma'am.
You're breaking up.
Yeah,
Did you
keeps
say
breaking up.
spa?
Yes, ma'am.
Okay.
Okay.
All right. So this would not be a legal question. So what I would want to do is invite you to speak with one of our business development officers here at JBDC to see how it is that they can provide you, maybe have a discussion with you and maybe develop some ideas as to how you can pivot, how you can make money in the meantime, because there are spas that are still operational even in this time. Persons are still able to go and get their feet done and get massages and stuff. So, um, can I ask you? I'm gonna private message you in the chat, and then you respond to me with your number, and I will pass it on to a business development officer. Okay? All right.
So I would just want to add to Roxanne, the tax question she's asking. I am not, what it sounds like she's speaking about is the estimated taxes that self-employed people have to make every quarter. And so at the beginning of January, she would have, or I'm sorry, in March, she would have filed an estimated tax return that would say, I estimate that I will make X amount of money for the year, and I'm going to start making quarterly payments in March, then in June, then in September. But here comes COVID in March going to April, and what she thought she would have earned and therefore is making tax prepayments of taxes for, she's not seeing it now, but she still made this declaration to the government in March, and they expect to see this equal installments of prepaid tax coming in. I know that form, I believe, has a box that would say if you expect that your income is going to fall a bit different from last year's income, you can indicate the reason. I don't know if I think you should speak with a TAJ officer or anyone you may speak to see if they have made some concessions, because that's a real issue. When we all made a declaration to say, we think we're going to make this amount of money this year because we didn't know about COVID. So, but we still have that obligation. I think it makes sense to find out from TJ if you can either amend that estimated tax return that you filed in March to account for what has been happening now, so that it can reduce what the payments you have to make.
All right, great. Thank you, Yanique. I see Patricia hand is up just as I'm about to read her question. So I'm going to allow her to ask the question. Patricia, I'm trying to unmute you. Go ahead now, Patricia.
Okay, no, I just wanted to respond to Roxanne and to say that you can actually refile. You can go and refile that of
Hello?
mine. Went in,
Say it again.
refiled
Say
it.
it again. Start again from the top, Patricia. You went out for a minute.
That you can refile the estimated tax return because I did it for a friend, refiled that the income was not going to what it had been filed, and they actually gave credit for the amount that had been paid before.
Okay. All right, Roxanne. So there you have some information that you can refile. But still send me, I'm gonna still message you and you give me your number. Thank you so much, Patricia. All right. So Patricia wanted to know, would the written contract terms have to specify that alternative dispute resolution is an option, or is it that when the dispute arises, the parties can simply agree to go this route?
Yes, so I believe if the contract is silent on how to resolve disputes, then you would have the option to agree on anything. And certainly many commercial transactions are going that route nowadays. So it is very much, that's why we have a well-developed the arbitration center. So the short answer is yes, if the contract is silent on it, then you are free to agree together to go to arbitration or mediation. If the contract, however, only says court, then on the face of it, is only a court remedy that you both have agreed to, unless you agree to amend that contract again. But again, you're at the mercy of the other party if they want to agree to do alternative dispute resolution. Not everyone is familiar with it and still prefer a court process.
Okay. All right. Just some useful information in here. Also, I think that Roxanne can benefit from this from Shanika Wallace Graham. She said she sent a request to the technical specialist unit because she's a sole trader and the tax office in Montego Bay said I had to pay because I was to file nil. So I'm assuming she's saying that she filed nil because she wasn't making any money. So that is something that you can also take into consideration, Roxanne. Is it true that if a business owner is employed and benefiting from the 1.5 million tax break, the business cannot benefit?
Can you repeat it again? Repeat it, please?
Is it true that if a business owner is employed and benefiting from the $1.5 million tax break, her business cannot benefit if she personally get the 1.5 million?
So if I understand that she's employed
Right.
elsewhere,
Uh-huh.
and she has a business otherwise. Is that what you understand the question to be?
Right. That's what I understand it
Correct.
to be.
Right. So each individual is only entitled to 1.5 credit. So if she's getting it in her salary where she's employed, then she can't also get it in her trading as business.
Right. All
So
right. There's
when
your
she,
response.
yes.
Let me see now. What if you take on staff on a project basis? Can self-employed persons or trading as business qualify for the employee tax credit?
So the short answer to that is if you have people on a projects basis and you are paying the statutories for them, then that I believe is what TAJ just wants to know that you are paying the statutories for persons. They're in your trading as name and they have the record. So once that is the case, then you should be able to claim the ETC.
Okay. Okay. All right. Very important question here. Can you comment on registered business address versus where the business operates from? So suppose my registered business address is 35 Hope Road, Kingston 6, but I operate from Portmore.
Mm-hmm.
So the person is asking you to comment on that for them.
Well, I believe that the companies with a business address. So the business address, my understanding is mainly for communication and notification purposes with the company's office. They need to know that when they send notices to this address, you will receive it. And so that is the registered address. As long as that is where you can be reached and returned, then I think that is their main thrust. But I believe technically, and I need to probably look back at the Companies Act, if it's a company, or the Registration of Business Act, if it says that you have to be carrying on business at that location. I am not sure readily, but it is not unusual for people to operate physically somewhere else and have a registered business office somewhere else.
Right.
As long as you can be reached, and if company's office sends a notice there, you receive it and you respond to it. I think that is their main focus.
Okay. All right. I have a question here from Bev Campbell, but I'm really not understanding what it's saying. So Bev, I'm going to open your mic and ask you to explain it for me. You hear, Bev?
Yes, I'm hearing you.
All right, go ahead with the question, because it's
All
a
right.
question about the key man. I'm not understanding.
Right. The key man being somebody who's so critical to your business, right?
Yes.
Based on how I operate, a cameraman and an editor, an ENG, the person who edits the video, right? Are two key persons that I work with. Now, for the most part, these persons are willing to say to you, this is my cost, and these are persons you work with regularly, but on a contract basis as well. Except you have a contract, you're subcontracting them. The persons usually know that they're part of your team, but then they're not willing to give you a contract per se. Now I'm hearing about the Keyman insurance for the first time, and I would love to be able to get back to if say I can't use them or they cannot be used. What happens? Can I giving them a subcontract? They're not employed to me per se, but can I then apply for insurance for them?
So the key man insurance that I spoke about, and I did start that slide by saying I'm not an insurance expert, but just sharing some business knowledge.
Okay.
Right. So it's better to be pursued with an insurance agent. But my understanding is that the context of the key man insurance is normally that it's an employee of yours, which is so ingrained in your business that if they leave, they get ill or they die, your business essentially collapses. So
okay. It won't. No, thanks. It won't collapse. Okay, you can find somebody else with those skills.
And
so
you sound like it's a contracted kind of or subcontract kind of arrangement. It doesn't sound like they are a integral part of your core business.
It is a subcontract.
I'm saying that I believe that it only applies to employee arrangements.
Okay, thanks.
So you can get some more detail from an insurance agent on the contract.
Great, thanks. May I ask another question or clarify something on the business address? I operated from home for a while, and then I decided to have a business address because I thought it was, the better thing to do. But now trying to get an account at a bank or another account, because I had one before, the bank asked me to verify my address. Having verified it, then they're saying to me, and this is a trading as business, they're saying to me, I need to prove that I operate from my business address, which I'm a little confused. What is it that they really require of me, though the form says prove that, but I'm operating from home as well as several other locations because of my business. But the address is now formally there for those communication purposes that you explained.
Okay, so
No.
did you provide that you would or you're trading as,
Yes, yes.
and they asked for your certificate?
Yeah, they got that, and it's on there now. Having seen that, they're saying to me, get proof that you operate from. And I'm a little now, why did I change that? So I'm a little like, is this the right approach that I've taken?
Yes, I think I'm not sure how to, that sounds like it's particular to the bank that you're dealing with. So I think you need to speak with them a little bit more about what their requirements are.
Okay, because I do some business there, at the business address, because like a conference facility is there. I do have regular meetings. It's done there, which I never had home to do. Couldn't have done at home. So
I know,
some things are done there.
I know the banks generally have an issue that they want to see a utility bill in the name of whatever. And if your utility bill doesn't come to the place where you are actively doing the business, then there's a discrepancy in their mind.
Yeah.
Yeah, so
But-
that might just be an administrative policy that the bank has, that you have to have a further discussion with them about that.
Right, thanks. Because they accept the utility bill. So it's maybe let's leave it. I'll go have a personal further discussion with them. But the business place is also willing to give the letter. The business address persons are willing to give the letter to say she operates from here. But it's part of the business that operates from there, not the full thing.
Yeah, you'd have to find out what would satisfy the bank's requirements.
Okay. All right.
All right. Thank you so much, Bev. Um, all right. I'm not seeing any more questions in the chat. Just to say that most persons are saying it was a useful presentation, excellent presentation, very insightful and easy to follow, welcomed information. So at this point, Yanique, I am going to tell you, thank you so much for having joined us this morning. As I said, I might want to invite you back because if you notice that there are a lot of legal questions, and as I said, we don't get a lot of our MSMEs don't get the opportunity to ask questions like these very often, and so you find that they get into little trouble here and there because they don't have the resource available. So I'm gonna let you know, but I'm definitely gonna invite you back before the end of the year, before the end of this season.
Okay.
And for everyone else, just so you know, as usual, the recording will be available on our YouTube channel at JBDC Jamaica. It should be up by Friday of this week, so you can access it at any time. And if you want something to binge watch, we have recordings from as far back as April from our JBDC virtual biz zone, from the gift and craft biz zone, from the in concert series, from our entrepreneur's journey. And so you can go on and binge watch as much as you want. If there are persons who did not, you knew wanted to be a part of this presentation, but were not able to be here this morning, you can also direct them to our YouTube channel. As a reminder, the JBDC offices remain open across the island. If you don't know how to reach any of the other offices across the island, you can always call our head office 876-928-5161. It goes up to 5, or send us an email at info@jbdc.net. The information will be directed to the right person. So once again, thank you for joining us and have a great rest of the day.
Thank you. Thanks for the invitation again, Sancho.
Thank you, Yanique.
Bye-bye.